Hey, everybody, welcome back to another edition of Market Talks with DrStoxx. This is Dr. Tom Carr, aka DrStoxx of DrStoxx.com. That's DrStoxx.com. And if you go to that website, you will be able to find the live trading room where this is coming from today, joining a group of several hundred traders of all different experiences. Some are professional traders and some are just starting out, and everybody in between. And if you're interested in hearing what I'm trading, I share with you the every buy, every sell, my price, my entry price, stop loss, target price, reasons for the trade. Go to the subscribe button, scroll down to the live trading room, and if you want to add on our new, fairly new, 5 months old now, live options room at a discount, you can do that in the same process. All right. That's all for that. Let's get over to some charts. I want to start first of all with the finviz.com, which is of course a very good place to start your introduction to the market. If you're not sure what's going on during the trading day, go here and you will see the four major indexes: the Dow, the Nasdaq, the S&P, the Russell 2000. I'm not sure if these are real-time charts, but they are 10-minute charts, and they give you a pretty good sense of whether the market's in a trend up or trend down or sideways chop, 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 chop consolidation. And I have to say, we are in a surprisingly strong trend up day. The market's gapped down quite a bit over the weekend because of Moody's downgrade, which, as I've been saying in the room, is very much of a lagging indicator. It really is reflecting much more of the reality of 2024 than 2025. So I think the market knew that. The market knew that. Yeah, there was a lot of panic initially and a lot of talking heads on CNBC and Fox Business and everybody saying, oh, panic, panic. But if you look at all the previous times, and there haven't been many, about three previous times when we have had a downgrade of some sort, um, from a credit agency. This time it was from Moody's. That's the first time that's happened. You'll see that, yeah, usually there's an initial flux of some selling pressure, but then within a week, couple of weeks, we're right back on track. And if you look down, 3 months, 6 months, 1 year down the road, everything's up, up, up. And the only time we get into signing kind of some panic selling is when we're already in a pretty rough market. We didn't have the flash crash at the end of March into early April on the tariff news. That has bounced back. Almost all of that has come back to the upside. And so we are still in a fairly strong bull market. We had a big dip right there in the middle, a great buying opportunity. Did I trade it perfectly? No. I thought we were going to get another leg down. I thought it would be at least a double bottom. So we sold short, made money on the way down. We made money on that initial rally higher, but then once it started to peter out at some moving averages, I put on some hedges and some inverse funds that they didn't turn out to work very well because everything just kept going up. We flipped around. Now we've just been pretty much all along with a few safe havens along the way, and things are working out pretty well for us. Never perfectly. We never trade perfectly. My historic track record is about 71% win rate if you take into account all the day trades and the longer term position trades. But yeah, always some mistakes made along the way. Okay, so let's take a look at some charts. Obviously, a trend up day. The gap down was bought. Whether we hold that gap closed as of the close of today, I don't know. We'll probably come back in a little bit. I think the upside is pretty much done for today. But let's see where things are going from here, okay? Market internals. 53% of the stocks are down today. About 2% or so are flat. So it is still a fairly modestly weak day. But the good news is that as the market's been rallying up off those April lows, we're starting to see market internals and breadth really strengthen nicely, very, very nicely. So more highs than lows. That was totally flipped about 3 weeks ago. It was many more lows than highs. Now it's just the opposite. Most stocks are trading above the 50 period moving average, with about 50-50 on stocks above the 200 period moving average. We'd like to see that improve a little bit more because that's kind of the line in the sand. Below the 200 period moving average, you tend to have stocks that are a bit problematic, downtrending, a lot of fear, a lot of negative sentiment. And those are the stocks that tend to have a hard time really getting some upside traction. But once they get above the 200 period moving average, it's like everybody breathes a sigh of relief. And okay, now we can start to look at this as a good quality long candidate. That's not always true. We do sometimes buy stocks. We bought one this morning. UNH, we bought this morning off the open, and it's well below the 200 period moving average. But those are exceptions, not the rule. Okay, let's go over to TradingView charts, and I'll explain my chart setup here real quickly for those that are new to the room. We have the daily chart on the left side. We have the 2-hour chart on the right side. Both of them have the linear regression channel, which is my favorite trending indicator. And it also can set up some really nice mean reversion trades. I have it here on two settings. So there's a 1.5 standard deviation with a 100 period look back, and then a 2.0 standard deviation 100 period look back. And when you put them both on the same chart, you get a nice little pink band down below and a powder blue band up on top. This is your 2.0 standard deviation range, and the same is true at the top. Here's your midline in the middle. And generally speaking, your best buys are going to come down here in the salmon zone of an uptrending LRC. And if you can get it all the way down into the pink zone, so much the better. And your best selling experiences will come when it gets up into that powder blue zone on an uptrending. That's where you want to take some profits off the table. If it's a downtrending LRC, as we see over here on the daily chart, then you want to focus on selling short in the blue zone. I'm not so sure this is Chipotle. So we're actually long this one, and it's finally gotten back up. This is a longer term position, finally gotten back up to about where we bought it. And this is now showing us a nice bullish inverted head and shoulders breakout pattern. I'll talk about that in a little bit. And so there are plenty of exceptions when you don't sell short in the blue zone, but that's a general rule. As a general rule, in a downtrending LRC, as this one here, when it gets up into the blue zone, as it did right around here, that's usually the time you want to start looking for a short position. Now, on the daily chart, I have the 21 period EMA, the 50 period SMA, the 200 period SMA, volume bars down below. I've got a proprietary, what does the guy call it? The guy who made this, it's talking about volume shelves. So the red volume shelves, these rectangles up here, are levels of resistance, right? Lots of shares are going to get flooded into the market once price gets up into that. And these green boxes down below are support zones. And when you get a green triangle, that's the buy signal. When you get a red triangle, that is a sell signal. I have to say, I've been playing around with this indicator plenty of times when it gives us false signals. So maybe it's a 50% chance. And the problem with this indicator is that if it like say it moves up through this resistance zone and starts entering into the next resistance zone above it, you're going to see this one disappear from the chart, right? So it's a dynamic indicator. The bad signals fall off the chart. You never see them. And the only thing you're going to see in the past here are the signals that actually worked. So yeah, take it for what it's worth. But anyway, that's what I've got there. I've got down below the MACD indicator, good old trusty momentum indicator, and the RSI. I use that for overbought, oversold conditions, bullish divergence, bearish divergence. And over on the 2-hour chart, I have the 34 EMA bands set at high, low, and close. They tend to act as support when price comes down into them from above, as resistance when price goes into them from below. You can talk about the top band as being your strongest test, right? If it comes down and tests that top band and bounces back up, that's a strong chart. If it comes down into the green line, which is in the middle, it's 50-50. And if it gets all the way down to the red line at the bottom, then it's probably not a very good chart to trade on the long side. It's showing some weakness. Doesn't always work, right? So here's one that just sailed right through, right? Bam, 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 all the way down through all those moving averages, and then it came back up into it from below, got all the way up to the blue zone from below. That's a pretty strong move, right, to the upside, and that set up a little bit of a pullback and then a nice rally north. And right now we're holding, this is Chipotle. So on a 2-hour chart, you're seeing a very nice looking bull flag develop. We did get above recent pivot highs and holding those levels pretty well. So it's not a short. Chipotle is not a short. Let me show you, since we're talking about it, I'll not talk about it later then. We are seeing a good, healthy bottoming pattern down here after a pretty long downtrend. Here's your left shoulder, here's your head, and here's your nice shallow right shoulder. Good volume balance going on for the most part down here, and we're verging on breakout of the neckline, and that should spur us up to about 60 or so in due course. Now let's go back to the indexes, because that's kind of where we make our bread and butter, our daily grind from the indexes. So we always want to trade in sync with the indexes for the most part, and we do a lot of trades on the indexes using ETFs, leveraged ETFs, inverse ETFs, and the micro E-minis, long and short. We just had a nice 7.5% day trade. Took us about an hour for the trade in the MES S&P 500. It was a perfectly formed bull flag. And we did the same thing in the options room, only we used options. We bought the SPY options on that, and it took us 2 hours, and we made 108% in 2 hours. So, yeah, you want to know what's going on in the indexes. You don't want to get left behind when the indexes are moving like they are nicely. So here's the April 7th low, flush out, panic. Everybody gets out. The market is crashing. Trump is going to destroy the economy. Get out now while you can. It's been a great bull market, but it's over now. See you later. And then, of course, 2 days later, it was one of the best days in the market. So if you know what you're doing with volume on these flash crashes, and if you look at extreme levels of breadth and extreme levels of sentiment, you can pretty well easily pick out those bottoming moments. And we had our best day for the year to date on that big green stick right there. Big green stick, and it was really nice. Now, then it started to get a little squirrely, right? It tagged the 21 period moving average. Everything is falling down at that point. The 21 is falling, the 50 is falling. The MAs are stacked in a bearish manner. And big red bar the next day, tagged it again a couple of days later. It looked to me like we were going to get a double bottom. So we got short there, made a little bit of money on that pullback, but then we got sideswiped by this flush back up. 3 days, we're back up to the top of the range. Again, testing some 50, this time the 50 period moving average. We had a couple of little weekdays in there, and I thought, okay, this is the beginning of the downtrend, and that's when I got into a little bit of trouble trying to put on the inverse funds to trade against that pullback, which never came. So if you trade the market that you're given, not the market you want. It's important to have a predictive sense of where you think the market's going. You can't trade otherwise, but be very, very flexible when you're wrong, right? You just admit it. Made a mistake. Okay, let's turn around. Let's start putting on some longs. That's exactly what we did. And we've had a very nice run ever since. Okay, so that's just trading. That's trading 101. All right. Now, where are we going to go from here? I think the S&P is going to tag 6,000. We came very close to it today. This is the micro E-mini for the June contract. This isn't the SPX. So the SPX is a little bit lower, right? It's about 43 points below 6,000. 6,000 is right here. And if we get all the way up to 6,100, we'll run into the volume shelf, which is to say the shelf from the all-time highs. And there's a lot of volume up there. There's a lot of shorts have their stops up there. Yeah, so I don't think we're gonna get up through 6,100 anytime real soon without a pretty significant pullback. But I've been saying that the latter half of May will be weak, leading us into some seasonal weakness in the first half of June. And so far, none of that has shown up. None of it. So we're just trading this day to day, and very happy that we've been, getting some good wins on the long side. Even today, it looked like, well, maybe today is the day when things start. But no, I don't think so. And I don't think they're going to start looking weak until we get to 6,000. And we've got, what did I say, 43? 43 points from current price still in the S&P, 43 points on a 6,000. What is that? I can't do my math right away. What about 0.8%, right? So it's not much more upside left in this run, but I think I just don't see how we can't not hit 6,000 on the current run. Then we might go sideways for a little while into the latter part of this month. A flash crash up, a face ripper up, a FOMO rally up into 6,100. I don't think we're going to get past that without a major pop. So if I had to sketch this out, and this is very provisional, right? Not anything that I'm going to hold myself to, but 6,000 sideways consolidation, 6,100, and that would take us out to the end of June. I'm not so sure that's the map, but typically you do get seasonal weakness in the first half of June and a little more strength, a little better, more robust movement to the upside in the latter half of June. July and August tend to be pretty good. September tends to be horrible. November, December tend to be good. So, yeah, so I think that's a pretty good map for the SPX. Let's take a look at the Nasdaq. It's pretty much the same picture, the same story. We might be a little bit lower than the S&P. Like the shelf is a bit further up, right, from where we are now. 21.6 is probably the near-term top for this current move. Are we going to go south from there? No, I don't think we're. I think we're going to get something like a little falling wedge or a sideways flag pattern or pennant pattern, or even a tiny little trading range, which you could see clearly on an hourly chart, 2-hour chart. Maybe this morning set the lower end of that range, and it's an outside day bar. So if the top could be the top of the range, although I think we still have a little bit more upside. But I don't think we really need to be too worried just yet about a major pullback. Now, all bets are off if a couple of things happen. We get horrible labor market returns, like the jobless claims just start skyrocketing. Haven't seen that yet. If we see consumer sentiment, which did come in a little bit weak, we see that start falling hard. See the ISM numbers come down, and you see the what was the other thing? And if we get a negative on the tariff deals. So China, there was some saber rattling going on this morning from China. Trump is being a little too harsh. He's not being accommodating enough. He's saying mean things about us, etc. And that caused the market again this morning before the market opened to be a little bit skittish. So anything more like that, especially if we get like China saying, no, we're going to go back to 145% tariffs on you guys. And then Trump, of course, is going to come right back 140% back on you guys. If we get that trade war scaling up again, right now it's descaling. So if it gets it scaling up again, then yeah, all bets are off. And we will certainly see much more volatility. But I'm really happy to see the Moody's thing get taken in stride because, as I said, that's a lagging indicator. It really doesn't match what is going on in the market right now. Small caps. Now, here's the small cap. It already hit the volume shelf, right? This is not all-time highs. This is just an intermediate volume shelf. It already hit that shelf, and it's doing what I think the NASDAQ and the S&P will be doing over the next several days, and that is forming this nice little bull flag, right? Or very tight trading range or high tight base, however you want to say it. And if you look carefully enough, you will see that this could also be, here's a very nicely formed left shoulder. Here's a very nicely formed and very deep head. And this could be just a very shallow little right shoulder that's forming right here on top of the LRC. I know everything is falling. 21 above the 50 is positive. 21 is rising. That's positive. 50 is flattening out. That's semi-positive. Volume balance last few weeks, pretty good. MACD is rising. RSI is rising. All that is good. We're getting some short-term momentum to the upside in the small caps. And if the small caps can rally, anything can rally, right? Okay, all that's good. Let's take a look at Bitcoin. I really like Bitcoin. I think it's not going to go down very much unless you get some really, really negative. I don't know what that would be. if the government starts clamping down on Bitcoin, which it's not going to do, then that would be a negative. But right now, it's just doing what it should be doing if it's in a bullish run, ready for breakout. And that is, you get up against that volume shelf, you start banging on that door, bang, bang, bang. You're getting people buying up here. They're not selling, they're not taking profits, they are buying, right? And we can tell because the moves are all off the lows of the day. Light volume coming down to the lows of the day, weak hands getting out, silly people selling their Bitcoin. And then it rallies back up into the close. That's a bullish candlestick. And you can see it's on good volume down here, very good volume. So yeah, Bitcoin, it's been up here before, right? 105 to 108 or so. It's been up here before. It's fallen back down, but I don't think that's going to happen this time. And at the very least, I think it's going to be kind of like what we've seen the last 7 or 8 sessions here, just some sideways chop underneath that. It's going to test it a little bit, right? Takes out a little bit of that supply, and then it will get slammed back down. Looks a little scary just to test the lows of the range, and then it's back up again. That's just how things work. Oil, we are long oil. We were short. We took a quick profit on it, flipped it over on Friday to long, and I'm glad we did because this is looking pretty good. And it's forming a right shoulder of an inverted head and shoulders. Oil is going to be under some pricing pressure from geopolitical skirmishes going on and production cuts. Once we finally get all the tariffs out on the table, we'll start to hear more about drill, baby, drill, and then we'll start to see pricing pressure coming on the bearish side, pushing oil prices down. But right now, I think the edge is to the upside on oil. We're still hopeful that gold has bottomed out on its pullback. We sat through a pretty big drawdown on Thursday last week. It was a disappointing reversal on Friday, but now we're printing a bullish inside day bar. We're above the 50. We're in the pink zone. Everything's still uptrending. We still have the stacked MAs bullishly, and we're starting to see some good bullish volume coming in recent trade. But I have to say the volume balance prior to that in this whole area up here was kind of flagging that gold was not ready to break out again. So no surprise that we're down here on the lows, but it is a very nice looking pullback setup in an uptrend down at support in the pink zone and above the 50. And we're seeing these lows intraday getting bought back. So hopeful for gold to rally. Of course, gold will rally even more if Fed can continue to be and move in a dovish direction. If they start doing a little bit of QE, there was some report over the weekend that they were buying back some bonds. Is that still true? I hope. We'll see yields come down. That will help out gold. We're seeing dollar get a bit weak. That will help gold. And central banks, last time I checked, are still hoarding the shiny metal because it's a safe haven against all the volatility. All right, 10-year yield is back up. Bonds are not cooperating today, so we want to see bonds rally. And there's been a lot of, there must be a lot of big managers that are in bonds heavy and buying because there have been a number of guys that you would normally think of as being smart money guys who are out there saying bonds, right? Bullish. So they must be way underwater and trying to talk up the trade. I do think bonds will have a moment. We're flat bonds right now. We do have some TLT calls in the other room and much better now than it was at the beginning of today. But yeah, we're just waiting on bonds. Let's take a quick look at TLT. So yeah, it was a deep cut low to the downside. Everything got rallied back up, and I actually removed our stop on that position initially, and then I put it back on because didn't want to get stopped out right at the open on down here at the pink zone. Here's another good tip, right? If you're opening up in a share zone, a support zone, a volume zone, and the pink zone of a downtrend, in this case, a slightly uptrending LRC, and you're opening up way away from the major moving averages, right, and the midline of the LRC, you can be pretty confident that it's going to bounce back, that you'll get some buying the dip coming in. All right, a couple of other charts here. We are long XBI. Sorry for the dog in the background, but we're long the biotechs in the wealth building portfolio, and it's starting to print a nice looking higher low, just not getting enough traction yet. But we're back above the 21 EMA, and we need to take out that pivot high right there for it to really start to squeeze higher. Keep an eye on ARKK. It's been a good run. It's in a breakout mode. The LRC should start to unwind to the downside and flatten out. And again, it kind of like biotechs, kind of like small caps. If ARKK can rally, anything can rally, right? These are a lot of growth names. Some of them don't even have earnings. They're speculative plays, a lot of them. Tesla's in there, of course. And Kathy's reputation as being an excellent stock picker has been a little bit tarnished in the last few years. So she just loves buying the spec plays, right? So she's very much of a forward thinker. And the market, of course, is a forward discounting mechanism. And right now, it's been saying, no, I'm not so sure those spec plays are going to pan out. But let's see where it goes. Keep an eye on it. If it can get above this little range, it should squeeze higher. And one of the plays in here that I wanted to point out, Kathy's been out buying GitLab, which is I don't think it's profitable yet, but it's a big software company, and it's involved in AI, and it's involved in robotics and stuff like that. And she loves it. She's been buying shares for a while now. So it's not looking very good, I have to say. But let's see if it can hold the 21 and reverse tomorrow. Give us a nice reversal bar. It might be good for a little bit of a swing. I'm not that interested. All right, let's take a quick look at the mags. We'll do worst to best. Tesla is the worst today, but I have to say it looks pretty good. We are long Tesla in the live trading room, and our long-term portfolio. And no, I'm sorry, it didn't. Yeah, it hit our target. It hit our target, and we got out. So I think we're flat Tesla altogether. But here's the thing: it's coming up in. It hit the bottom down here. This was where's the April low? April low is right here, right? The flash crash, and you can see that the April low matched the lows of March. So while everything in the Nasdaq was hitting lower lows, the Tesla was not, and that was a very good sign, a bullish sign that things might get really interesting with Tesla. And then if you put your resistance line on the top of that range, here's your little bullish base. We'll call this a bullish base, which is, sorry, I'm not drawing very well today. A bullish base is a base that forms at the bottom of a downtrend, and you start to see within that base, you start to see some really good volume accumulation, which is what you see here, and starting to get it again over here. When you start to see that inside the base, it's time to start nibbling on some shares because breakout is imminent. And here's your breakout move, and here's a little bit of some cooling off, sideways consolidation, bull flag. You need 5 bars for a bull flag. We only have 3 or 4 right here, so a couple more days perhaps, and then we'll be able to jump back into Tesla. But it looks pretty good. Apple to me is not. I'm just not interested in Apple. Everything is still falling lower. It did get a big jump up on the China thing, but it hasn't been rallying since then. Just not interested. CRM has had a nice run. This is your big software play, and it did crash into the 200 period moving average. It's been rolling over from there in a downtrend. If it can hold up and then close above that 200, that would be a big negation of a long time of bearish sentiment in that company. So let's keep an eye on it. Netflix, it just keeps going up. Google and Apple and Amazon, I think, are the 3 of the mags that have just been under a lot of resistance and haven't been able to kind of get back on top. And every time it gets near that resistance, it reverses, it gets weak, it's selling pressure. So I don't know what's going on with Google other than, antitrust stuff, I guess. But the market it's not in favor with the market right now. That and Apple, I would just stay away. Now, having said that, I have shares in my long-term family fund of both companies. So long-term, yeah, I think they're good. Short-term swing, not there yet, unless you want to short it. I wouldn't kick anybody in the pants for shorting it on this little 3-bar reversal, but I wouldn't do that either. I wouldn't do that either. I think the face ripper rally risk is to the upside and not so much to the downside right now. Nvidia looks good. A little bit of a cool off today. I think it's got another leg higher, probably 145, maybe 150 on this current run. The momentum is good. Starting to get some political tailwinds working for it as well after a long period of negative headlines. So yeah, so I think Nvidia could be bought for a short-term swing. There are better setups out there. Here's Amazon, and actually, it's not as bad as I thought, but it did pop way up, way up on the China news, right? The 90-day, not the 90-day scale back, the scale back from 145 to 80, from 80 to 30, something like that. We got that over the weekend, and everything was way up on Monday morning, and now Amazon's kind of pulling back in. But the big green stick today, light volume, that's not so good. But we're still above the 200. And if we can get back above that pivot high right there, it'll be okay, but not great. Really not great at all. Avgo's doing fine, but it's stopping up at a very heavy, that's the purple. The purple is strong, volume shelf. Qualcomm, same thing. At least it's up into the shelf. Let's see if it can crack to the upside. And Microsoft has been a real monster. Yeah, we had Microsoft in one of my newsletters, the trend trade letter, and it hit our target at 440. And it's just, I thought that was it. That little reversal bar right there, that little red bar, I thought after a flush out day the day before, then a red bar the next day, and I thought, that's it. That's it for Microsoft. And it's just been going up and up and up every day since. Okay, let me quickly go through my greens list. And I actually have gone a little bit over time. So I'll make this the last bit. We bought some ARM this morning right at the 200 period moving average. Semiconductors are coming back into play, getting some good political tailwinds. PLTR needs to cool off a little bit. I kind of like it down here around 115. It's not there yet. I would like to get us into some small caps, the TNA or the M2K. If this little bull flag pans out to the upside, it's not there yet. And we are long bulls. It's a good way of playing all the mags plus a few others. All the big blue chip tech stocks are in bulls, 15 stocks, equal weighted. Very good leveraged fund for that. Short-term swing trades only, though, please. Upstart is no longer printing this inverted head and shoulders. I'm not sure, though, if this is dead altogether or if it's just taking a little pause. We could still think that the right shoulder is forming. It is holding the 50 today. It is a green bar. Yeah, we'll see, but it's not a buy just yet. I kind of like HUT as a play on Bitcoin. It's been off my radar for ages and ages, but there was some good call flow in it last week and again this morning. And it is forming a nice little bull flag right here. It used to be, among the miners, it used to be the best rated in Market Surge and elsewhere. I'm not sure that's true anymore, but the miners have kind of gone off my radar for a while. But I'm starting to think if Bitcoin is up at all-time highs, the miners should start to catch a good bid. Just as the gold miners played catch up really quickly when gold was up at all-time highs, they were down near 52-week lows for a long time, and then they started to play catch up, and when they did, it just went boom. And I think the biddy miners might have that as well. Intel is not horrible. It's catching the 21 today. The 21's rising. You know, a little bit of a recovery play there for a good old American big semiconductor play. We're long RGTI as a little lotto play, and it is flagging above a bullish base breakout. So keep an eye on that one. Let me see what else haven't we looked at. Here's a China play, PDD, very similar. Looks a lot like RGTI, and Futu, similar story as well. They're coming into earnings. Futu, I think, already had earnings. Uber, we were long we were long Uber. We took profits in two tranches, and both of them were nice trades. And of course, it's about $2 higher than where we got out. So you just never know. My weakness as a trader is selling my winners too soon. We were in this one. We took profits. It's right about where we sold it on Friday last week. It was like a 9 or 10% overnight trade. So we just took profits quickly. The reason I like this is that it was seeing call flow last week. B, it is one of the strongest biotech companies rated in market surge, 96 EPS. If you look at analysts, they're all on a strong buy with huge, like over like 3-digit price target increases above current price. So there seems to be something going on with this company that isn't reflected yet in the market. That's the trade I really like a lot. And LABU itself, which is the sector for that, is starting to get a little firm. I'm not saying it's bullish, but it's firm. Here's gold in a nice pullback. We saw that already. UNH is doing great. We bought it off the open this morning, put our options room in some calls, and here it is trading up at the highs of the day. Now it's going to have, it's going to have some give back along the way, but there's plenty of value here, and I think we probably got in near the lows of this disastrous news cycle. Lastly, CRWV is an IPO we need to keep an eye on for a pullback. It was down this morning, rallied up, it's just a monster stock. It opened, it gapped up and went, just gapped and goed on Friday, and hasn't really given us much of a pullback. So William O'Neill has kind of a twofold system for getting into new IPOs, and you never buy it on the opening day. You let it trade higher and lower, right? Here's your trade higher, here's your trade lower, and then you figure out kind of the pattern that it's making. And if it's a pullback pattern, you can buy it on the breakout. And if it gets up to new IPO highs, you can buy it on that day right there. And both of those times would have been nice entries. I wasn't watching it at the time, so it wasn't on my radar. All right, guys, I'm going to have to let you go. God bless everybody. Have a great rest of the afternoon. I will produce the video and then get back into the room, and we've got over an hour of trading. We'll figure out our best response to the current market in just a little bit. Bye for now. God bless.